have you really thought through your moat? Is that a true moat? Is speed really your only lead right now? And I think it's going to lead to a bloodbath down the road.
I'm joined by Elizabeth Weil, the founder and managing partner of Scribble Ventures and a longtime friend. She was a partner at Andreessen Horowitz and an executive at Twitter during a period of hypergrowth. Elizabeth's invested in more than 60 technology companies: Slack, Whatnot, SpaceX, Coinbase, Figma, Poolside, Gusto, just the list goes on and on.
It was a wild west of Twitter. There was no Twitter for iPhone app. That was actually my first acquisition, a company called Tweety. So it was a really neat time where the company was only 50 people. So there was so much to build. If you learn nothing else, like just growth teaches you so much.
The AI market, I'm not going to use the B word, but let's just say it's frothy. Curious how you guys think about that.
I think having been in venture for 20 years now, my opinion at least holds a little bit of water when I can tell a founder, don't chase higher valuation just for the sake of a higher valuation, because this is such a wild market. VCs are jumping in to chase those early signals, placing a very high raise valuation on those points. What you thought was going to be your leading metric becomes not quite the one you want to chase anymore.
Hey, it's Glenn Solomon here, and today on the podcast, I'm joined by Elizabeth Weil, the founder and managing partner of Scribble Ventures and a longtime friend. Even before founding Scribble, Elizabeth had a remarkably impressive career. She was a managing director at 137 Ventures, a partner at Andreessen Horowitz, and an executive at Twitter during a period of hypergrowth as it scaled from about 50 to more like 3,000 people. And with all of her free time, Elizabeth is also a competitive ultramarathoner, and one of us, not saying which one, just sounds like they went for a run this morning with a broken foot, and I'm not that crazy. Elizabeth's invested in more than 60 technology companies across all stages, including Slack, Whatnot, SpaceX, Coinbase, Figma, Poolside, Gusto, just the list goes on and on. I'm really excited to have you here, Elizabeth. It's going to be fun to dive into all the chapters of your professional career and hear more about how you're thinking about the world going forward. So thanks for being here.
Well, thanks for having me.
Awesome. So I wanted to start by asking about your early career where you worked with some VC firms. I think Menlo and IVP were two firms that you spent time with. And I'm curious, do you think it was a good career choice for you? What did you learn then that sort of still informs what you're doing today?
Yes, and I always joke that it makes tons of sense looking backwards, but I don't think you can really mess up when you're going early in your career, going into either a tech company or a VC company. I think you end up learning great things from both. And I was fortunate to be a Mayfield Fellow at Stanford back in 2003. There, I was working at two venture-backed startups through the end of my master's in engineering. So that gave me some exposure to what it was like to operate. And I absolutely loved it. There was just that skip in your step that happens when you walk into a fast growing and fast moving company. But then when I was thinking about what my first, I joke, real people role was, I was thinking, do I go to a big company like Google or Yahoo? Do I go to a little company, some startup, or this thing called venture? And I knew very little about it. And I actually got an email to the Mayfield Fellows alumni list that gave the Menlo job description saying they were hiring. And I said, well, that sounds like a pretty cool job rec. So I threw my hat in the ring, and 3 weeks later, I had an offer. And it sounded like, well, this is pretty great. So, why pound the pavement and look at what else is out there? And one of the great things looking backward is really, I joke at that point, when you're a young person in a venture firm, you're just a giant funnel. And my role was to dial for dollars, and the partners would literally drop magazines or tearouts on my desk and say, go look up this company. And this was pre-blog era, or just the very nascent blog. So there wasn't a great repository for companies that were starting. So it was just such a fun time that you'd get a lead, you'd try to hunt down the founder by guessing the email, getting a phone number, and then really screening companies and starting to learn what are the big tactics and things that the partners would like. Ultimately, with the holy grail being bringing a company to a Monday morning partner meeting and ultimately making an investment. And then from my own career standpoint, it was a great way to look at a vast market and figure out who are the key players, who are the ones that might thrive down the road. So it really gave some good light into what type of company would you want to join later down the road. And In fact, one of the companies I cold called was a little podcasting company called Odeo, and
Mm,
Ev and Biz were building that. And actually, on that call, they said, "Well, don't worry about this little Odeo thing. Like, we just have a beta for this thing called Twitter." So I actually started as an early beta user, and that was far before, my time actually at IVP when we made an investment in Twitter, and then when I ultimately went to work there years later. So fun of the people you collect along the way from an early venture career.
very cool. So speaking of Twitter, in your incredible career, one of your experiences was to work at Twitter, where you started the Corp Dev team and also launched a product marketing team during what must have been just an absolute crazy time at Twitter. Curious, like if you could take us back in time and walk us through what that was like, what you learned, what's been formative for you from those experiences.
Yeah. So I'd actually gotten to know the company about a year prior to me starting, made a small investment in the end of 2008 when I was at Institutional Venture Partners. So got to know the company from the business side then. And then my husband, Kevin Wheel, we were already married at the time. And I was asking who we might know that could start the analytics team at Twitter in early 2009. And he popped out of the PhD at Stanford and said, "Well, I could figure that out." So he went over ultimately and started before I did. So I got to know the company over the summer of 2009 because I found myself taking my laptop up to the office. There were no badges on doors then. Anyone could go to the company, all hands. And that late that summer, it was finally Ron Conway who said to me, "You're taking up space here, so why don't you actually get a job?" And that planted the seed for that. And Dick Costello had just been hired as the COO at the time, and he hired me to start the corporate development team. And what was so neat about that back in the day, it was a wild west of Twitter. There was no Twitter for iPhone app. That was actually my first acquisition, a company called Tweety, led by Lauren Brichter, and that ultimately became Twitter for iPhone. Alad and Ottman, who were doing Mixer Labs at the time, that was another early one. So it was a really neat time where the company was only 50 people. So there was nobody really focused on biz dev, corp dev, all of the non-eng things because it had been so engineering heavy at the
Hmm.
time. And that was still in the fail whale days. So there was so much to build. And through those 4 years, hypergrowth, like you mentioned, up to the 3,000 people from 50 to just shy of 3,000 in the 4 years I was there. If you learn nothing else, like just growth teaches you so much. And hyper growth is something I will never experience in my career again at that pace. So it's just wild ride.
If you think about how important Twitter, now X, has become in just society, the way information spreads, the way people express their ideas, and did you have a sense back then that you guys were building something that was going to have this meaningful an impact on the way the world works?
There really was something special that felt special when I was there. And I do say at that time, we were hiring such quality people and you would go to lunch and I felt like the talent at Twitter had, of course, their superpower in their day job, but then they also had some unique, weird superpower, like
Yeah.
being an Olympic diver or, a Rubik's Cube champion. And it was just a really fun, interesting culture mix. So you felt like we were doing something that mattered. Also, when the wind is at your back and you're seeing your company in the world's eye every single day, Oprah was onboarded to Twitter. World governments were changing form because of Twitter.
Yeah.
Celebrities were coming in, presidents were gracing the halls of the Twitter office, using the platform. So any day you could see the world momentum of this little service that you were being a part of, and then it grew to be bigger and bigger. And I felt like, and so much what I got to focus on, especially when it was early product marketing, it was also the little people that needed to be onboarded, like the first winery joining Twitter and how do they talk about it, or the North Face brand and how do they communicate with their users. So I think we saw it in both the big and small ways, but I always thought it felt like that we were doing such a world good that Twitter could just exist as a public utility. Like there was a reason that we all need to be
Yeah.
doing the work. And there's something so orienting and truly solidifying a workforce going
Mm.
forward when you see yourself operating in the day-to-day light.
That's awesome. What a great story. Well, I really want to talk more about what you're up to now with Scribble. But before we get there, I did also want to ask you about A16Z and your experience there. As I recall, you were one of the things you did there was work on this value creation team, which in today's world, most venture firms of some sort of scale have a platform team. We do at Notable Capital, but I think, back then it was pretty novel
Mhm.
and you were on the inside track there. What were your thoughts on that platform, how it got built, the kind of value it added, and how has it informed what you've been doing today?
Yeah, it was really a fun time, and, it's so hard to even remember back then because now so many venture firms have these
Yeah.
other ancillary services, hiring teams, go-to-market teams, value creation, and at the time, Andreessen was really putting the operations verticals on the map, and most firms really were just built of investors at the time. So the group was called Market Development, and we had 2 sides, both consumer and enterprise. And I was focusing on consumer when I started. Ultimately, it encompassed both. But really, it was connecting the Fortune 500, Global 2000 to our portfolio companies, end goal being revenue. So our portfolio companies loved the service. We had set it up like an executive briefing style.
Yeah.
So I would spend my time meeting Fortune 500 executive teams, asking what's important to you, what's important to your roadmap, in the next 3 to 5 to 10 years, and then curating a set of our Andreessen Horowitz portfolio companies that would fit their interest areas. And then the executives at that company, say Pepsi, for example, Indra Nui was the CEO at the time. She came to the Andreessen offices with her exec team, and they got to meet our portfolio companies one on one, and then explore partnerships and ultimately revenue generating deals for those companies down the road. So it's really neat to have a seat in that customer motion. It's something we can help our Scribble portfolio companies with. And it's not only the connection to the right groups and the right buyers, but I also look at it as being a giant translator because often startups don't know how to be able to even work with a larger company. And then
Mhm.
often larger companies don't know how to ingest a smaller opportunity. So, how do you do either a market or pilot in some area, not an entire worldwide rollout, for example? So, I'm glad I can help our companies navigate those waters too now that I'm at Scribble.
Yeah, that's a great insight. We work with a lot of companies that aspire to sell to enterprise. And when they're young, we oftentimes advise to really pick spots carefully, right? You
Mhm.
could you could get absolutely inundated working with what seems like a great logo on a potential huge deal, but you end up um, you know, being asked to take the product in all kinds of different directions and make commitments.
Exactly.
And yeah, this is really a challenge for startups that want
Yep.
to work with large companies.
Especially when you have that, the shiny goal of a great logo on your
Yes.
next fundraise desk, but
Oh
they've
yeah.
entirely changed your roadmap. So,
Yeah.
yes, it's something I'm glad I can advise on.
That's awesome. So let's fast forward to Scribble. I learned something today. I figured you and Kevin had met at Twitter, but it sounds like you
Nope.
predated Twitter. So what led you guys to decide to start Scribble? You've worked with many venture funds in the past, and this is not either of your first rodeo. So what led you to decide, hey, the world needs another venture firm. It should be Scribble. It should be started by us. And curious, like what that spark was like.
Yes, yeah, happy to walk you back. And to go even further back, Kevin and I actually met on the triathlon team at Stanford.
Oh, that's awesome. I
And
did not know
that
that. Okay.
20 years ago, I was getting out of the pool, getting ready to run a marathon that weekend, and the coach pointed him out to me because he was gonna run the same marathon, and the rest is history. That was 20 years ago, and
Hopefully
now,
you beat him in the marathon, but,
close, but not that time. He is fast. I beat him at many other things though. So anyway, yes, he'd started at Twitter, like I mentioned. I'd gone on to Twitter, and then Andreessen, he ultimately went over to Instagram running product, founding Libra while he was at Meta, and then going on to be the president of Planet before OpenAI. And throughout that time, we were just very plugged into the valley and tech, and day to day working as operators or investors, but just the people that live here, it's the fabric of this culture. And you're going to a dinner, you're going to a kid's birthday party, and there's founders and VCs, you're going to a soccer game. And it's just being, I think a lifelong learner, inquisitive about other people, and interested in your craft, but then also a good player in the ecosystem. I always love connecting people. And I feel like so much of the motion of venture is really just that. So it started really organically. Like Kevin and I started angel investing probably about a decade ago. And this was tiny checks because we had very little money at the time. And it was $5,000, maybe $10,000. But in these great founders and ultimately friends that were around the valley and beyond. And we built a personal portfolio over, some time of 100 companies. And
Wow.
23 of them are unicorns. So it's not a bad group of friends.
That's
But
amazing.
after 100 companies, I picked my head up. This was, just having kids, and we're never going to be able to send our kids to school if we keep investing personally at this clip. But I'd actually never wanted to raise capital. I absolutely hated selling Girl Scout cookies when I was a kid. I hated
Mm.
asking anybody for money. That was not what I wanted to do. So I never thought I would raise a fund. But through our personal angel investing, the founders would tell us, despite check size, we're the most helpful on the cap table. And I felt like, wow, like that bar is low then. It would be so great to build a venture fund that wants to stay as a seed fund, wants to stay this right size, where you can write a collaborative size check, where you can really return the fund time and time again. And that's just what we set out to do. Scribble One was my pandemic baby, I say. Started in early 2020. It was a summer of Zoom fundraise that, I raised a $50 million fund for Scribble One. And that was 2020 vintage. Scribble Two was a $55 million core fund, and then a small breakout vehicle for B and Beyond. And then Scribble Three just wrapped up this spring, and that's a $90 million fund, and then another small breakout fund coming. So, been a very fun journey so far. So glad I did it. But I did ask myself that very question: why does another seed fund need to exist? And we are all operators, investors. We roll up our sleeves. And I think one of the things that really sets, our bar is we still want to be told, despite check size, we're the most helpful on the cap table. And I really love doing that with our crop of founders.
That's awesome. And just the progression you've had is amazing. I'm very fortunate and lucky to be invested, I think, in all the Scribble funds so far. And I can speak from experience, like your results are really, really strong, which is incredible. And I'm curious if you'll go back to kind of like the early days of Scribble One, making your first, because you'd done, like you said, you were prolific angel investors, but it changes a little bit when you start investing other people's money, and the check sizes are a little bit bigger, and you feel like more is on the line. Uh,
Yes.
how did you make those first few decisions? How hard was it to transition, and kind of add those first companies to the Scribble portfolio, and maybe tell us about one or two that you feel really like have sort of hit the mark and you feel proud about.
Yeah. So I did put some training wheels on for, maybe the 6 months prior to starting Scribble. So I set a small strategy and said I was going to write 100K checks, and that was going to, really prove that we could write a larger check size and add that value. So I'd started that. But ultimately, that's when I decided I just wanted to build a fund. But when you have taken other people's capital, it made me even more terrified and more
Yeah.
driven to build a world class firm. So we say we write a collaborative size check, and now that's roughly 750K to $1.5 million. In Scribble One, we were writing, 500K to $1 million checks. But it does set the bar very, very high, and worked, our tails off. We're still a small team, but work our tails off every single day. We, as angels, had built this network operator group around us that purely were friends at the time. These are people that help, intro you to companies. They're day-to-day operators or investors, but can help win companies down the road or help the companies. And so actually one of our first investments we made was a small company called Whatnot, introed to us by one of our friendly angels who's an operator by day. Really hairball idea for this, live global shopping as entertainment. But, through all of my time at venture, we'd been looking for the kind of that new QVC, or that new wave of shopping and commerce. And then you'd seen Twitch take off, where people could watch people play video games, why wouldn't they watch people shop? So all of these market signals started coming together while we were looking at this weird company. And at the time, Pop Shop was one of, the most hot companies in that space. So we kind of looked contrary when we made the investment. And that company, world-class team, has gone to raise their E round most recently. So we were in that first seed tranche and most recently raised a round that values the company north of $11 billion. We
Wow.
actually were able to, our Scribble One LPs very much, we underwrite every investment to be a X, but right now this is one of those true unicorns. So Scribble One actually, through a few different ways, but we were able to return three-quarters of the fund already, and that was just in about 4 years. So really want to reward the people that put us in business now and continue down the road. So thank you
Go
for being a
Scribble
strong
One.
supporter. We love it.
What an amazing story about whatnot. If shifting gears a little bit to like the founders you're working with, you've worked with a lot of founders. I'm sure you've seen some that are just phenomenal and have really executed well. What are some of the common mistakes you see from founders? And I'm thinking like curious about AI, if there are some specific issues that AI oriented founders face these days.
Yes, I'd say on both sides. So the first part about some good signals in founders that we've had, like I always like seeing founders that have like some super deep understanding of their domain.
Hmm.
And I saw this when I was early at Andreessen Horowitz when we still all were in partner meeting all together. And I ask founders now, like, why you, why this, and why now? And the why you is a huge piece for me. And I feel like when a founder can step out of their pitch deck and say, like, actually, like I grew up here and my mom did this, and then there's some reason that they're focused on this problem. I feel like there's that guttural desire for their company to exist when they have some story about why them. And I really like deeply technical teams. And then early signs for me are the ability to hire. So if you can really craft a great early bench, I think that's significant signal that you can talk other crazy people into joining your
Yep.
idea. And I think that also goes into customer sales and getting those first few revenue opportunities or customers. But I really do like there's some reason on why we invested in a company called Poolside, and the CEO is the former CTO of GitHub. So some deep reason why they had a thesis on building that opportunity. And then on those, some of the common mistakes we see, there's so many people, so many founders that are chasing the same opportunity. And this is such a crowded time right now.
Hmm.
But I think that's why it's even more important. Have you really thought through your moat? Is that a true moat? Is speed really your only lead right now? And I think it's going to lead to a bloodbath down the road. But I think why really backing strong founders that will be able to navigate these tricky waters, because it is a confusing time right now in the market. And a lot will not need to exist, in my opinion, in the future.
Yeah, I think defensibility is a real question mark. We ask ourselves as well in these fast moving markets. One other question I had for you, the AI market is, um, I'm not going to use the B word, but let's just say it's frothy, right?
Yes. I'll
Valuation
say the B word.
valuations are high, and it feels like expectations are super high. Companies are growing super fast. We had a dinner, my partner Jeff, who I know you know well, and I held a dinner recently in San Francisco with some of our AI founders, and it was just incredible to hear the back and forth, from Guillermo at Vercel, and Garrett at Handshake and Berkay at Fowl and Paul at BrowserBase. And just to hear how quickly they're moving, how fast they have to move to stay on top in their industry, it's just like nothing we've ever seen before. And valuations and capital are getting thrown at companies that are showing progress. So curious how you guys think about that, how it's impacting the Scribble business, and then how you're advising founders who are kind of in this world to be thinking about it.
Yeah. So a few thoughts. One comes back to that portfolio theory where you are building and crafting a portfolio and putting on your VC manager hat. And there is a time and place for that crazy valuation and some extreme founder that has some reason for raising at the price they are. But I think it comes with balance of also backing, single digit first time founders that are doing something at the pre-seed. So I do think it comes to mixing that up. But I do think this time is quite crazy. I think having been in venture for 20 years now, my opinion at least holds a little bit of water when I can tell a founder, don't chase higher valuation just for the sake of a higher valuation. Like we are in the early innings of company building. And I think one of the crazy things about this AI time with valuations is you start to see some early signal. And I think because this is such a wild market, people are jumping in, VCs are jumping in to chase those early signals of, is it a growth signal? Is it a revenue signal? Is it a customer activity signal? And placing a very high value and raise valuation on those points. I think that's when advising, like, this might change. This might be an early signal, but will it plateau? And off, really, with some of, we've even seen this. Some of those, what you thought was going to be your leading metric becomes not quite the one you want to chase anymore.
Yeah, crazy times. Talk to me about like your outlook and where are you hoping to see more deal flow, more opportunity for Scribble in the future? Are there areas within AI you're excited about? Are
Yeah.
there other areas you guys are forging into? What does the future hold, and where are you guys
Yeah.
trying to get deeper?
So a few areas that interest me. I still very much like health and health services. We have a
Yeah.
few companies, even one called Superdial in the portfolio that's been doing some interesting things there. FinTech has always been a passion of mine, but I like a little nuanced FinTech. Like for example, we have a company called Alex, and then they're in the AI powered estate settlement. So some of these more off the beaten path, but still needs to exist
Yep.
for a huge part of the market. Infrastructure has been a key theme for Scribble going to the very early days. We're investors in Base 10, which is, a great company that's building that side. Education is something I don't think we've solved yet. I very deeply believe that every person on the planet will have a live tutor that is absolutely tuned to that person and their
Mhm.
learning style, their expertise, and where to go. I'm still looking to make my favorite investment in that space. I have a an 11-year-old and 9-year-old twins. So seeing the way they interact with ChatGPT and all other AI things is very much influencing my investing more in the how do people interact with AI. So I think there's some interesting things there. Like my kids, for example, only use ChatGPT with voice and they, don't type anything. And so how much more will, being at that age that they will just expect to be able to do with voice. And then one of the out there areas that I'm looking at and chasing and just I think about is I really do believe that we'll outlast ourselves in this AI way. And what I mean is I'm my parents are very happily still both alive, and I can call my mom and ask her something and tap into her knowledge base. That won't be around forever for me. But I bet my children will be able to ask their mom a memory or something that I know. And what is that form factor? I don't know. So that's something I think about too. So kids very much influence investing, even on the gaming side, gamification. But, I think why we take a generalist first approach is I want to build a really special portfolio. And that does encompass robotics, space, everything out there, consumer and enterprise. So, yes, so I just stay curious and stay hungry.
Stay curious, stay hungry. Well, Elizabeth, this has been fantastic. It's so great to hear about your not only your experiences, but that now how you turn them into real great insights, great decision making, and just the impact you're having on the world today at Scribble. It's really inspiring. So thank you so much for spending some time with us. Best of luck with Scribble. Stay curious, stay hungry, and I'm sure there'll be many more great funds to come from Scribble, and we're all looking forward to it.
Well, thanks for being a strong supporter. And yes, love what we get to do. So cheers to that.
Cheers to that. Take care.